DecisionBar trading software provides you with a roadmap of the market you are trading. With DecisionBar, you know not only where you have been, but where you are going. Trading signals are added to the chart in real time. Once a signal is generated, it stays on the chart. It doesn't disappear if the expected move fails to materialize. DecisionBar signals are easy to understand. A green arrow suggests a possible long trade, and a red arrow suggests a possible short trade. DecisionBar works for all trading instruments with enough volume to create a true market. This includes stocks, index futures, and currencies, as well as commodities and T-bills. It also works for interval charts, tick charts, volume charts, and with range bars. Here is a chart of the S&P 500 E-mini using a 466 tick chart. A tick is the same as a trade, so each bar of this chart represents 466 trades. The first signal on this chart is a sell signal, generated because the market dropped below its current support level. This is called a breakdown signal. Our risk oscillators track momentum on an instantaneous basis and can help you determine if you should enter the suggested trade. In this case, the oscillator is negative and dropping, which supports the case for entering a short trade. Our risk oscillators are very fast and often lead the market. Note here how the oscillator peaks before the market actually makes a top and starts moving downward. There are separate oscillators for stocks, Forex, and futures. The next signal generated is a long exhaustion signal, suggesting that the downward move has lost its momentum and we should consider exiting our long trade and entering a short trade. Note that the risk oscillator is peaking just as the signal is given. So, while we would probably exit our short trade here, we would likely wait on entering a long trade. A few minutes later, the oscillator turns back up and provides us with a long entry point. Note also that a new support level is identified as the signal is given. In evaluating this trade, we note that the first area of danger will occur when the market attempts to overcome the broken support level, which triggered our first trade. This support level will now likely provide resistance to upward movement. Sure enough, the market does reverse at this level, and our software issues a signal we call a secondary decision bar, indicated by the double arrows. Secondary decision bars are not as powerful as primary decision bars and suggest possible reversals. The reason for this is that markets often retrace a bit when encountering a previous support or resistance level, but then manage to overcome them. Secondary decision bars are also generated each time a resistance level is moved lower or a support level is moved higher. A few bars later, a confirming secondary decision bar is generated as a new lower resistance level is identified and the upper pivot is moved downward. Not all trades are winners, but DecisionBar keeps you on the right side of the market, so you minimize your losses and are always in a position to catch the next move. A few minutes later, a long secondary decision bar is generated when a new support level is identified and the lower pivot is moved upwards. This time we are going to use our dynamic trailing stop module to help us manage the trade. The DecisionBar dynamic stop module is unique in that not only does it tighten when a predetermined profit level is reached, set by the user, but it also adjusts automatically for market volatility. Our dynamic stop module will protect your profits by tightening your stops more quickly if volatility decreases. It also helps you avoid being prematurely stopped out by tightening your stops more slowly if volatility increases. When new DecisionBar signals are given, you may decide to ignore them and let the stop module manage your trade. As you can see, DecisionBar trading is a complete trading solution for both beginning and experienced